Are you trying to pay your mortgage off before you retire? If that's you, if so, I've got 3 ways that you can do it. I got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, do you want to pay your mortgage off before you retire? If so, I'm with you, right? I am with you. There's more people that are going to find themselves in this predicament. There's already a significant amount of folks that are retiring, still have a mortgage. It's okay. It's not the end of the world. It's not going to destroy your plan. However, whether you need to have that mortgage paid off or not depends on comprehensive financial planning and you working with your CFP to see, okay, is this a requirement? Okay, but here's why I think it's more likely that we're going to be seeing this more and more in the future. Number one, housing prices are through the roof, no pun intended there, right? So you've got to pay a lot more for a house today, and meaning it's going to take a lot longer to pay off. So that's number one. Number two, mortgage rates are extremely low. Yes, they've come off rock bottom, but they're still extremely low, and you've got to struggle, like you've got to wonder, well, should you pay this thing off to begin with? What's such a low interest rate? Should you even do that? And then 3, because rates have been so low for so long, lots of people have refinanced, and likely if that's you, that now like mortgage term might be a little bit past when you were planning on to retire because you're refinanced, right? So I think it's going to be more and more common that people venture into retirement with a mortgage. If you want to avoid that, if you want to get that thing paid off before you retire, what are the best ways to do it? I've got those 3 coming up. The first one, and this one is logical, but it is helpful, and that is working with the CFP or doing an online calculator to determine, all right, well, how much would I need to start paying on a monthly basis starting next month, starting right now, in order to get this thing paid off by the month I plan to retire or the month before I plan to retire. And yeah, being that specific. One of my favorite examples ever is working with longtime client where we've done all sorts of goal achievement with financial goal achievement with, you know, her business and with getting ready to retire and with building a house and making additions and improvements onto the house, all sorts of things, right? Well, she's been maxing out her 401k and her Roth IRA and her HSA every single year. Really dream client, right? Very focused and goal oriented. And we got to a point, this was maybe 12 years ago now, where it was, okay, you funded all of those things, your business is doing well, you're working hard, there's a little extra cash flow, where should that go? And she's very disciplined, so she said, well, I mean, I could spend it, I don't really need to. And we did the calculation to say, well, if you put an extra, I think it was $411, something like that, per month onto the mortgage, you'd have the mortgage paid off by the date she wanted to retire in the summer. You'd have it paid off in June of the year you want to retire. And we did that math, and that $411 was a little more than what she had kind of room for in her budget, but she said, yeah, I'm goal-oriented, I'll figure this out. I'm going to do that. I really want to do it. And sure enough, her financial life changed like so many others, but however, she still was, stayed on track with that retirement goal. All those changes, she still retired at the time she wanted to. And yeah, she paid the mortgage off the month before she retired. Fantastic. And we would tune into that plan, that initial calculation, at least once a year. Hey, is this still working? Yeah, I'm still making that payment. Hey, is cash flow too tight? I'm still making the payment. Hey, these other changes that are happening in your financial life, do we need to adapt this? Nope, I'm still able to make that payment. And sure enough, it worked, right? So doing that sort of math, that's the easy way, that's the simple way, but it's the disciplined way, okay? So work with your CFP, see if that makes sense. Where it wouldn't make sense, okay, let me just point out a couple things to be aware of. Number one is you've got to be aware of your escrow, right? So if you're looking at your total monthly payment, you input the wrong calculation because you're assuming all of your payment is principal and interest. You're not accounting for the amount that's going towards insurance and property taxes. You're going to do that calculation wrong, okay? So number one, be aware of your escrow that's going along with your monthly payment. Number two, and this is the most important one, you've got to make sure that putting this extra money towards the mortgage to get it paid off by the time you retire doesn't crowd out money going to other necessary financial goals. Because if you say, and working with this individual, if she would have said, you know what, I can do that and I'd like to do that, and in order to do that, I want to reduce what I'm saving into my 401k. We would have had that conversation to see if that made sense. In her case, it would not have made sense because the 401k is giving her some tax benefits that are much needed at that time, that were much needed at that time. Obviously, paying extra onto the mortgage doesn't give you a tax benefit, right? So you're going to want to make sure that this is truly excess dollars. If those dollars that would otherwise be going on the mortgage to pay it off sooner by the time you retire, if those dollars should be going into tax shelters or towards some other goal, and that's the higher priority, then you got to do that, okay? That's where I would argue you might be able to do this calculation through some online calculator, but work with your CFP to see if this makes the most sense. All right, the second way to pay your mortgage off by the time you retire isn't just to increase your monthly payment, it's to chunk it down. Make chunk payments. What do I mean by that? You get a tax tax refund. Instead of thinking of all these things that you could do with that money, just make the decision up front to say, okay, any tax refund, bam, onto the mortgage. So you get a tax refund, you get a bonus, you sell some sort of asset, something like that. You find ways to get chunks of dollars, $1,000 here, $1,500 here, $5,000 there, whatever. And as you get those chunks of dollars, just throw it right onto the mortgage, okay? That will help you when it comes time to calculating, all right, well, how do we get over the hump here? We've made progress. Now, how do we finish it off? And that also, if you're chunking it down, that may make it easier to then switch to an increase in your monthly payment. Or it's going to help make it easier when you do those final chunks, okay? And those final chunks are, all right, we've paid the mortgage down to a level that is below the total amount of cash that we have saved up. We've got an emergency fund saved up. We're saving up for our next vehicle. We're saving up for these other things. And, you know, the total amount we have in cash is $35,000 and the mortgage is now $30,000. Well, what do you think? Should we chunk this down using our cash and then use that savings, the money that we were paying on the mortgage, to build that savings back up? Don't do that without talking to your CFP first, but that's something to consider. That's that final chunk. Or as you get near retirement, it wouldn't make sense from a tax standpoint to liquidate some of your retirement dollars and chunk that down in the mortgage. I'm not saying that's the case for everyone, but I'm a numbers geek. I've run the numbers, I've done the math, and in certain situations for certain clients, maybe it makes sense. Okay, yep, you've got you've got $75,000 left on the mortgage. If we take out $25,000 a year over the next 3 years, you'll stay within this certain tax bracket, and we'll go ahead and chunk it off that way, something like that. So second way of paying your mortgage off by the time you retire is chunking it down with pennies from heaven, tax refunds, bonuses, those sorts of things, or other assets. And then, of course, the third way to get debt-free, mortgage-free by the time you retire is to downsize, okay? And that is, say your house is worth $300,000 and the mortgage is $125,000. By the time you retire or as you approach retirement, sell your house for $300,000, pay off that mortgage and use the cash, whatever's left over, okay, to buy a house with cash, all right? Now, lots of people, and this used to be more common, in the past, but lots of people say, that's what I'm going to do, because we don't need this big of a house right now when we retire, because right now is when we got the kids and lots of activity, blah, blah, blah. I get that. That's the life I'm in right now. You're not going to need, or you might not think you need that big of a house by the time you retire, so we'll just downsize. But here's the risk. Downsize doesn't typically mean down price or down cost. Lots of times, especially right now, those smaller houses or the more, a ranch style or ones that have less maintenance, those sorts of things that are more appealing as you enter retirement, they're paying, the cost is at a premium. You're going to have to pay more. So what you think, well, I'll just be able to use the cash to buy the next house, typically doesn't pan out that way, because downsize doesn't necessarily mean down price. The other problem with this is you also need to account for realtor fees or other selling expenses. Oftentimes people just do the simple math and say, well, if I can sell it for this and I pay my mortgage off, I'll have this much cash and I can certainly find a house for that. But you've overlooked, well, 6% goes to the realtor and there's a couple percent probably that will have to go to cover some of the costs of fixing this up or that up or whatever, right? So we often overlook that, and those dollars can add up. And then the final reason that this downsizing might be trickier than you might think to pay off the mortgage at retirement is the added costs of moving, the added cost of buying, right? When you buy that next property, when you buy that next house, typically you're also buying some paint, or you're buying some new furniture, or you've got to repair or make a quick change to that house because it's your retirement house. We don't want to have, you know, the seashell counter bathroom. No, we want it to look nice. We want it to, whatever, be our taste. And so oftentimes we oversimplify that, well, I'll sell my house for this, I'll pay off the mortgage, and I'll use the remaining cash to just buy a house, and that's how I'll be debt free. There's a few things that make that harder in reality than it is in your mind. So those are 3 ways on how to get your mortgage paid off by the time you retire. But the big question is if. Should you actually do that, right? Should you do that? And that's where you've got to take a comprehensive approach to your financial life. Working with your CFP to see, well, based on all 6 areas of your financial life, certainly your cash flow, right? That's where this mortgage lies, and the cash that goes to make the monthly debt payment. That's where it's harnessed. But when you look at your protection plan, your tax plan, your investment plan, your retirement plan, and your estate plan, when you look at all of those together, are there other options or other strategies that present themselves that say, hey, this is a higher priority, or this is a different way to pay the mortgage off? Work with your CFP on that. That's why you need a CFP doing comprehensive financial planning. If you don't have a CFP on your team, you can contact one on my team. Find us online, korhorn.com. That's Korhorn with the K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.